Clause 3. Today, we want to talk about types of traders. Now, there are two main categorizations I want to focus on today. We have types of traders based on their preferred style of analysis. All right, that's the first category we'll look at. Based on the style of analysis, we have fundamental traders. Fundamental traders base their tradings off of macroeconomics, global economics, based on laws and policies of the nations that are released in news releases. Fundamental traders depend on news and the way those news will affect the investor's view of the nation's economic strength and whether investors would be interested in investing in those nations or not, depending on things like the non-farm payroll, unemployment rate, interest rate, consumer price index, and etc. People who trade based on all of these informations are known as fundamental traders. They trade fundamentals. We have the technical analysis traders, people who trade based on the information presented on the charts. Their creed is, we know where price will go if we know where price has been. So they look at past information on the charts and apply technical analysis tools to try to preempt the next move that price will make, making use of things like candlestick formations, chart patterns, harmonic patterns, Fibonacci tools, etc. People who trade like this are called technical traders. The second categorization we'll look at is based on the duration of their trades. The first on the list is scalpers. Scalpers have huge risk appetite. They can take on several huge positions and close those trades in a matter of minutes. If they are right on the money, they make a lot of those in few minutes. But if they are wrong and it all goes south, they equally lose a lot of money in those few minutes. This style suits people who have big risk appetite, who are after quick results, and who don't mind losing their whole capital in one sitting. They stick to low time frames, 30 minutes, 15 minutes, and below. Then we have the day traders. These ones are more patient, but they don't leave any running trades over the night into the next day. They stick to time frames of maybe 1 hour and below. They don't have those huge risk appetite. They don't take huge risks like scalpers, and they are more patient than scalpers. And then the third category we'll look at today is the intraday or the swing traders. Now, these are the most patient traders. They can hold trades from as little as 24 hours to weeks and even months. I know a trader who holds trades for months with smallest lot size of 0.01 and holds them and holds them and holds them. Weeks run into months. They focus on higher time frames like the 4 hours and above, mostly the daily, the weekly time frames. Those are the time frames they look at. For this training, we'll be looking at fundamentals and technical analysis. We'll be combining both of them. All right, we'll be using forexfactory.com. We'll be using investing.com and TradingView to know when news releases are coming up, because news releases cause a lot of volatility in the market. So you want to know when to expect those sharp moves and how to navigate them or stay out completely. Then we'll look at technical analysis. Now, technical analysis is where we're going to pay a lot of attention. We're looking at how to determine the trend and then what to do depending on what the trend is. And then we'll look at entry strategies. Thank you very much, and I'll see you in the next class.